Good afternoon, everybody. I'm going to let everyone see the Dow Jones Industrial Average on a daily chart. And we're going to talk about one thing here on a daily. Now, listen, we started out 2016 and we went straight down. We were totally in bear market territory with 20 to 30% drop in visual equities. What I can say though is that on the Dow we come right there. And this was the 2015 highs on a daily. One of the other things I want to be very clear about is that I'm going to draw a short-term trend line, and it's going to come over here at 17.5 on the Dow, and this was that consolidation. Um, the whole movement in the Dow Jones is based on lower volume. The commitment in volume is not there. The biggest part of this rally has been a short cover rally. The whole thing. Now, what's going to end up happening is that they use supercomputers, high frequency algorithms that the exchanges use and everyone else uses. Now, the 10-month will show you what it looks like on a monthly chart. I'm just saying right now, from this consolidation, the bull is in charge, but the bull has a problem. It's extremely low volume. And the whole rally has been a short cover rally. So when you take a net, the short interest in the Dow and the 30 stocks, well, listen, as they go higher, the bear has to buy the cover. So you got short covering rally on extremely low volume. That is not a good recipe. And we are in the earnings season right now, and both bull and bear and the volatility for 2016 is here, and it's going to get a lot worse. The volatility is going to get a lot worse than what it was from here. We popped it up and we put in this double bottom run, and we've gone parabolically up. We went through the resistance levels. Just remember, mathematically, bull and bear moves mathematically can have the same distance. Right now, I'm going to cover back in our economies way back here in 1991. I was here every single day of these years. And what I want to show people is that bull and bears in the Dow for a much longer time. Listen, the world is not the same. Things have totally changed. There is more manipulation and corruption in the financial services industry. What happened in prior years is not the same. They use computers called supercomputers, and basically it's a computer driven price that runs the prices up. And back here in 1996, 1994, I was there every day. And you can see, though, that by the time that we got to 1999 and we had this breakout it set up back in 94 and 95, and guess what? It gave it all up right there. And back in year 2002, we put a bottom in the markets, and I just want everyone to understand what the difference is about these markets. And when I take this time frame from 95, we set up on this monthly chart and we rocked right up. 1999 was a real big hump thing. That's when the day traders and people could buy stocks on their own before they had to have a broker. Now, one of the things that I want to be very clear about is in year 2000, from that bubble, it dropped miserably and it's not come back since. So, one of the things that people have to understand. So, back in year 2000, this was one of the biggest bubbles that we had ever seen. And that every time that the US economy is being stimulated, it went all the way down here on this monthly chart. Um, when Mr. Bush in 2003, we had what we call the Iraq War, and wars provide bull markets. And so on this monthly chart of the Dow, we're right up here right now at a very major resistance level. Now, this has been going on for 7 years. And what I am telling you right now, our economy, our companies, their earnings are less. This is not a real bull run. It's a very low volume run in all of the key indexes that have been on extremely light volume. I'm going to go ahead, and what I want to tell everyone on the Dow is that this is what it looks like. The white line is the 50-month moving average, and that's what it is. And I'm just going to say one thing. I'm going to go back to 2015. I'm going to go to the monthly tops of where that consolidation failed to go higher, and it did. And then in the last days of December of 15, we started with that gap down. And the minute that this white line is a 50-month moving average. And what I am going to say is that the low right here was 15,450. And this low right here was 15,503. And we had bear market territory. Stocks were dropping 20 to 30% off of their highs from 2015. You know, here we are 7 years later with hardly anything that I can say is that there isn't any growth. That, yeah, everything has some growth, but hey, this is not a rip roaring economy. And here we are on the monthly chart. This is going to be that resistance level. So we've had 1 month off of the bottom, double bottom on a monthly chart. We came right up here and we hit that. And now, so far for the month of April, we're right here. But I want to just tell everybody a little bit about this history that the Dow Jones was massively had a short interest float in all of the indexes. So the whole rally on low volume with short covering rally. This is not the kind of rally that we would like to see. This is a mechanical rally used with supercomputers, high frequency algorithms. And people don't know it. The public doesn't know it. They don't know the differences between what's really happened in this last 7 year period versus other periods that the U.S. economy um, does not hold its gains because of the stimuluses. We have 0% interest rate almost. There's consequences. Look at we're going into a major earnings season right now. 4/13, 2016. It started, and this is the history of the Dow on a monthly level. And basically, we start this back here in 1997. And in 1997, we made tops in year 2000 and it went torpedoing down. And there is the top here on a monthly level. And then March of '09, straight up. Folks, I'm sorry. This is not a real economic expansion in the U.S. economy, and that the earnings growth are going to be contracting. You heard what I said, -8%. And we'll revisit this same setup in a couple of months from now.